Hello again, everybody. This is another small lecture on our introduction to basics of the German tax system. And you remember perhaps that apart from income tax and corporation tax, there is another additional tax on businesses in Germany that is called trade tax. At least that's my translation. The official German term would be Gewerbesteuer. And this is a tax which goes back to even the Middle Ages, and it's levied by the German cities. So this is one of the most important financial resources of the German cities, and under the German constitution, the German cities have the right to at least one source of tax income, which they can influence by their own decisions. So the trade tax rules, how to compute the tax base, are defined by a federal law, but every city sets its own tax rate. Well, so trade tax is levied from all business owners, and now an important aspect must be known. The tax base means to cover all the earnings which are generated by the business, and it should play no role to whom these earnings are handed over. So the profit of the owner is naturally a part of the earnings generated by the business, but also interest paid by the business to banks or to persons who gave a loan. The interest income then was also generated by the business. So it will be covered, at least in part, by the trade tax too. Lease and rent payments are also earnings generated by the business and then handed over to somebody else, namely to the holder of the patent rights or so. The same for somebody who uses machines but doesn't own them. That person pays rent for the machines, and the rent payments are generated by the business, so have their origin in the business profit, and so they are subjected to business tax too, so to the trade tax. Um, Naturally, that's perhaps a kind of a hardship if you are a business owner, because then you have to pay your trade tax on your own profit, on the interest which you pay over to others, on the lease and rent payments, on the license fees, and all that. Um, Normally, if you know about the rules, well, it's just a part of your calculation that you think, okay, if I have to pay 1 million license fees, that is for me not 1 million, but 1 million plus the trade tax on that 1 million. So perhaps it is 1.2 million. So that would probably not have a huge impact if you're well informed, but not everybody is. And in the course of time, the legislator in Germany began to make compromises and said, we want to improve the position of businesses. And so we renounce on the full taxation of many of these parts, these payments. For example, income, lease, and rent and machine rent payments are not fully taxed by trade tax anymore, but they are sometimes only taxed by a quarter of their amount. And then there is even a free allowance of, at the moment, 200,000 euro for these payments. So if you are the owner of a small or medium enterprise and you only pay interest or license fees in a total of 200,000 euro, then you don't have to bother about all these add backs that business expenses are included in your trade tax base. But if you are a huge firm which distributes a huge amount of money in form of license fees, rent payments, interest payments to others, then you will probably have to pay trade tax on a certain percentage of that amount. So that's rather a bit of a peculiarity. The origin lies in the wish to prevent tax saving models. Naturally, if the profit from a business is taxed, but expenses or money can leave the business in form of an expense untaxed, then everybody would try to generate as many forms of expense as possible. For example, the owner of a small business would no longer finance his business by equity, but borrow the money from his wife or husband, pay interest to wife and husband, and the trick would be the interest is for the recipient, not business income. And so you would be out of trade tax liability for a huge amount of your earnings. And that is why historically that rule was made that all earnings generated in the business will be taxed by trade tax, irrespective of to whom they are paid over. Well, if you need particular details, you would have to read the German Trade Tax Act. So a bit of your payments of your business expenses, at least the ones listed here, will be taxed, but not everything. Remember, compromises have been introduced. Well, the computation of the trade tax is another peculiarity, because the business profit is first multiplied with 3.5%. And then, only then, afterwards, is the trade tax rate, which is set by the city, or trade tax multiplier, or whoever you can translate it, only afterwards that is applied. And this so-called Hebesatz is then usually rather high. These 3.5% multiplication issue goes back to former times when the trade tax consisted of 3 individual parts. It contained of a tax on the business profit, on the business wages paid to the employees. Remember, everything generated by the business was originally meant to be taxed, so they also included the wages because they were generated by the business and then paid over to the workers, so there was also a wage tax or a wage trade tax, and capital invested in the business was taxed. And now you can't add these 3 bases without modification. So every of the 3 trade tax bases was multiplied with a weighing factor. And 2 of them have been eliminated. And now only the trade tax on the profit itself, plus these small add-backs, which I mentioned already, remains. The trade tax on wages has been removed, and the trade tax on capital has also been eliminated. So a weighing factor would no longer be necessary, but tax people and law people stick to traditions. They say we always took it times 3.5%. We are not going to change this. So traditionally, the business profit is still, or the modified business profit is still multiplied with 3.5%, and then with the Hebesatz, the trade tax rate of the city. Now, surprise, these Hebesatz factors, these multipliers or tax rates by the city, can now become relatively high, because if you have to finance yourself on only a 3.5 part of the profit of your enterprises, you probably need more money. So there was in the course of time a tendency that a city claimed 100% of 3.5% of the profit, and then that was not a natural limit, so they began to ask for 200% or 300% or 400%. At the moment, 400% trade tax rate is rather the average rate in German cities. And now, ladies and gentlemen, one thing is very, very important. Never ever tell a foreign investor that you live in a city with a trade tax rate of 400%, because that will give them a shock. 400%. Well, I only earn 100%, so no, no, this is terror for an investor. So you must immediately tell them it's 400% of 3.5%, so it's nothing else than 14% plainly of the profit. If you don't add that information, probably your potential investor is crying and running away with a speed which qualifies him or her for the Olympic Games. So the 400% are really confusing. In reality, it's 400% on 3.5%, and that is nothing else than 14%. Naturally, a city might set the rate to 410%, or it might be satisfied with 380. The lowest rate which you can find in Germany at the present time is 200%, which is still taken by 3, 4, or 5 cities throughout Germany. I don't know which cities these are, usually small, unimportant hamlets. The big cities usually get along or need some 400 or 450%, which is tolerable for the businesses which are which have to pay that. So in the average case, you are taxed by the city with what corresponds to approximately 14% of your profit. By the way, that is the reason why you always get confronted with that estimate that German businesses are taxed with approximately 30% of their profit, because 15% corporation tax plus 14 point some digits after the comma for trade tax. Now, well, the economic problem of the existence of the trade tax is that the trade tax is a special additional tax, and that this tax is especially levied from that type of income which is the most beneficial for the population. If you invest in opening a business, you create new job opportunities, and now you are punished for doing that by having to pay an additional tax. Now that might motivate you just to say, okay, then I don't open a business. I make my money by placing my money in a bank account or acting only as a shareholder of an already existing firm, or so I don't start a business because I don't want to have business income. So the fiscal authorities have a long time ago already realized that the existence of the trade tax is economically a bit harmful. So they tried to find a solution for that. Now the problem is the cities should have some fiscal autonomy. They should have a fiscal income of their own, which they can influence by setting tax rates. And there is only the trade tax which people can imagine. Now the German federal government some 30 years ago had the idea, well, we could not abolish trade tax, but try to compensate its effect a bit. And so they inserted into the federal legislation on income tax a rule that if you pay trade tax, you can credit your trade tax amount up to a certain level to your income tax liability. And that, ladies and gentlemen, means nothing else that what you paid to the trade tax is in an indirect way refunded to you by the federation when it comes to paying income tax. Because if you owe them an income tax of 450 euro and you can prove them that you already paid 200 euro as trade tax, then they say, okay, then we credit that, we regard it as a prepayment to income tax, and we only ask for the exceeding amount of the remaining 250. So indirectly, the federation pays your trade tax. Naturally, think about that. If a city council knows that, and naturally they know it, that would be for them a great incentive to push up the trade tax rates. What about 10,000%? The federation is going to refund it. Um, and then you would have golden lamps in the street financed by the city, because it would be really a temptation. And naturally, to stop that, the federal legislation made two basic decisions. First, they only refund or credit, is better. They only credit the trade tax payment to the income tax burden up to a trade tax rate of 400%. So if a city increases its rate over what is the average rate at the moment claimed by German cities, then the city citizens, the inhabitants, have to pay that on their own. That is not refunded or credited by the federation anymore. And the second barrier which they introduced, and that is rather an unfair or unjust one, that is that credit mechanism has only been established for the income tax, so only for natural persons. The credit mechanism has not been established for corporation tax. So the official reason given was, well, corporation tax rate with 15% is low enough already, so we can't lower the tax revenue again by crediting to the 15% the trade tax levied by the city. But it's nevertheless rather unfair, because the 15% are only 15%, because later income tax on the dividends comes on top, so that the total tax burden is comparable. Well, but if you have that in mind, you see that up to a rate of 400%, the natural persons will probably don't care about the trade tax effects. If everything works in a fine way, then what they pay as trade tax can be credited and lowers their income tax burden. So for them, it is no effective tax burden. Whereas all those inhabitants of the city who run a corporation, let's say a small GmbH or a medium-sized AG, so that they pay corporation tax on their business profits, they have to pay trade tax, and the trade tax will not be credited at all. So they will fight against any individual small increase of trade tax rate. So there are totally different effects depending on the legal form in which you run your business in Germany. If you organize it as a partnership or run it as a sole trader, then you don't care about the trade tax up to a level of 400%, at least in the standard situation. Whereas if you have a GmbH, trade tax is a huge calculation factor for your tax burden. So keep that in mind. And naturally, many cities now have ended up with 410%, 417%. Due to the COVID crisis, probably in the long run, the rates are going to increase again. So you will probably end up with a small amount of trade tax, which really ends up as a definitive fiscal burden, which you have to finance on your own, even if you are a natural person. Well, this shall be enough for trade tax. And the next thing what we should talk about probably is some basics about how can you do something like tax planning. So how can you design your behavior in a way that your tax burden can be lowered or can be minimized without that you suffer negative effects from it. That will naturally come as subject of our next small chapter. Till then, enjoy the rest of the day, and I will be glad to see you again soon on this channel for this lecture. Thanks for watching. Hope you enjoyed it, or you enjoy that it's over, or both. Till next time. Ciao.